Everyone, myself Vaibhav. In today's session of Market Movers, we will take a look on the USD JPY, which has been in a downward spiral for last almost a week, and here we are seeing a possibility of it continuing this downward trend and moving towards the lower levels of 104, which is its next support zone. So we are going to see if we can figure out some entry and exit points for our trading setup in which we can optimize the risk and reward ratio and see if we can profit from these opportunities. If you consider the trading context for the day, we got plenty of data during the early Asian trading hours as well as European trading hours, and even for the US we have got GDP and the initial jobless claims. If you consider the data we got during the European trading session for the Germany, we got unemployment numbers, GDP growth rate, as well as inflation data. And here, the unemployment rate is almost the same as per the as equal to the prior month, and now for the month of July, it stands at 6.4 months. So there is not much change in the unemployment rate, but the GDP contraction is sharp, and as per the flash estimates for the second quarter of this year, we are seeing a GDP contraction of 11.7% in terms of year on year, and in terms of quarter on quarter, the GDP contraction is at 10.1%, and both these figures are actually worse than the expected numbers, and as a result of that, we saw huge sell-off in the Germany's equity index, the DAX, which slid by almost 3 percentage point after the release of these GDP numbers. Moving on to the Eurozone data, we got these couple of economic releases, including consumer confidence, economic sentiment, unemployment rate, and the consumer's inflation expectations. And in almost all these data prints, the surprise is on the negative side. We got data which is actually worse than the expectation. And now for the month of July, the consumer confidence has gone further in the negative territory at minus 15, and the economic sentiments have slightly improved compared to the prior month of June, but still well below the expectations. And the unemployment rate has also gone up now at 7.8% compared to the 7.7% earlier. And of course, the inflation expectations have also gone down as most of consumer demand has fallen, and as a result of that, the prices of common commodities and various services have gone down. Moving on to the North American trading session, we got US GDP numbers, and here we are seeing the largest contraction since World War II. And in second quarter of this year, we are registering a 32.9% contraction, and even for the first quarter, we had already seen 5% contraction. So this is huge, and it is kind of unprecedented, at least in modern history. But as is the case, it was pretty much expected given the backdrop of widespread lockdown in most part of US. So that's not a surprise here. And one more thing is that we got the initial jobless claims, and here also actually the news is on the softer side, and the initial jobless claims have gone up, and this is also actually worse than the expected numbers. And for the week ended 25th of July, we have initial jobless claims at 1.434 million. So this is also, as I said, worse than the expected numbers. Now let's shift our attention to the technical outlook. Here we will consider the USD JPY and then Nasdaq. Let's start with the USD JPY's technical outlook first. This is the daily time frame chart for the USD JPY, and after consolidating closer to this 107 level, the USD JPY has been in this downward spiral for most part of this week, and here we are looking at the possibility of USD JPY continuing to move lower towards this 100% Fibonacci expansion of its prior fall starting from 111.6 levels to almost below 106. And now after this long consolidation, as I see here, we have this fresh break, and most probably we are likely to see this continuation. And the USD has been on the softer side. Almost all the major peers have gained against the USD in recent past, and I'm not expecting any turnaround in sentiment, not yet. So because of that, we can bet on the continuation of this momentum, which is on the bearish side for the USD JPY. And considering that, if we were to look for optimum entry and exit points, I think we will mostly have to rely on the consolidation and the price action, as here there is not much an resistance inside if we were trade using the support and resistance zone, as we have already seen sharp sell off. And this consolidation which has been happening for last two sessions is going to provide us some opportunities which we can indeed exploit. If you consider the regression curve, it is sharply bent on the downside, and also now the price action is hovering in this bearish zone of first support and the second support of this month's pivot point series. So there is not much on the lower side which is going to provide immediate support for the USD JPY. The next support, the S2, now stands at 104.17, which is pretty close to our target zone. So I think here we will have to mostly rely on the hourly time frame chart, and in these we have this crucial price zone of around 105.2 to 105.3 price band. Here we have this 50 SMA pretty close, and also on the higher side we have this 100 SMA which is there around 105.318. So if we get any entry for a short sale trade in the price band of 105.20 to 105.30, I think that would be a good idea to try to see if we can profit from this consolidation phase, as on the higher side we have the resistance zone in the vicinity of this immediate swing high. I think most probably if we don't really see a turnaround, then the possibility of USD JPY moving beyond this 38.2% Fibonacci expansion, Fibonacci retracement is fairly low. Of course, in the market you can't really be sure 100%. That's why we keep the stop loss. So here for a entry anywhere close to 105.2 to 105.3, it's a price band, and of course you will have to take the decision depending on the consolidation. That's why I'm not being precise with the price here. So watch out for the price action in today's session, and if after due consolidation you get any opportunity, you can go for that. And on the higher side, the stop loss can be kept just little above this immediate swing high, and in the same price zone we also have this 38.2% Fibonacci retracement of this fall from 107.2 to 104.7. So that can be the level which can be used for our entry and exit point. And as I have said, on the lower side we can target the price closer to 104, and even if we were to trade with a risk reward ratio of 1 is to 2, so for a risk of around 40 to 50 pips, I think we are almost targeting 100 pips on the lower side. So even from the conservative perspective, we are getting a risk reward ratio which is better than 1 is to 2. Now moving on to the Nasdaq's technical outlook. Here this is the Nasdaq's daily time frame chart and what a rally it has been for Nasdaq. But now I feel that that rally has ran out of steam, and on the higher side, closer to these all-time highs for the Nasdaq, we are seeing consolidation, which is likely to extend for next at least a week or two. And in the meantime, we can expect the Nasdaq to even correct towards these 10,000 zone, which is also the 23.6% Fibonacci retracement of its rally from the levels below 7,000 to almost 11,000. And given the backdrop of rising initial jobless claims as well as the low GDP numbers, the GDP contraction, and not to forget even yesterday's grilling of various tech executives is likely to weigh heavy on the Nasdaq's immediate future. And from that perspective, I think the short to medium term outlook for the Nasdaq remains on the softer side. So here I am of the view of betting on the sideways to bearish momentum in the Nasdaq to prevail for next couple of weeks. And from that perspective, I think it will be better if we continue to look for opportunities to go for sale in Nasdaq. And if you consider this 4 hourly formation here, after these incremental gains and then these sideways momentum, we have seen this regression curve slowly bending on the lower side. And now on the lower side, we also have this first resistance, which is kind of acting as a support for the Nasdaq around 10,500. And here we have indeed seen this consolidation and buying momentum coming in around these levels, but eventually it is likely to give way. And if and when we get an entry below this zone, and I think looking at the possibility of Nasdaq extending towards 10,000 zone, we are pretty much in a favorable positioning here. We have this consolidation happening in this 10,500 area, and on the higher side we can expect these immediate swing highs to act as a near term resistance. And unless and until there is a break above this immediate resistance area, I am pretty much confident that if we get any entry for a selling opportunity for a sale trade in this confluence zone of all these three SMAs, the 50, 100 and 200 SMAs. Here we have which are converging between the price band of 100 and sorry the 10,700 and 10,600. So taken together, we have these immediate resistance zone, and as I said, unless and until we have a break above this prior swing high, we can be fairly confident of our trading setup as well. So in today's session, I would say that if you get any opportunity, if you see the Nasdaq consolidating in this price band of 10,600 to 10,700, and with the stop loss coming in around a little above this prior swing high around 10,850 to 10,900 area, we can indeed look for short selling opportunities here in today's session. And even a couple of sessions back, we had considered the Nasdaq shorting, and even in that point in time, I had said that any entry in the price band of 10,700 to 10,800 would prove profitable. So suppose if in yesterday's session, if any of you had gone for that trade, I would say that you might be already sitting on a good amount of profit here. And even in today's session, given the fact that we haven't really seen a fall towards this prior swing low, the opportunity is still there. And of course, on the higher side, we will have to watch out for a break above this immediate swing high, and that's the reason why we are going for a stop loss around just little above this immediate swing high as well. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.